Hello and welcome to Core Finance. This is our morning show sponsored by Beaufort Securities. And I'm joined today by Mike van Dulken, who is Head of Research at Accendo Markets. How are you today, Mike?
Very well, thank you.
Well, let's kick off with the market movers. And, well, it's not actually much moving the market. We've got all the M's here. So we've got Merkel, Macron and Moody's Monday. So it's been quite a heavy news flow over the weekend. And it feels like the market's just sitting on its hands a little bit, taking stock of what this means, maybe looking forward to the next or the final quarter of the business year. So, I say quite a few bits to talk out. Anything that's jumping out at you to maybe excite the markets?
The Moody's downgrade, the UK sovereign, just hours after Prime Minister May spoke and delivered a keynote speech on Brexit, would have more of an impact. I guess they were merely highlighting much of what we already knew, the impact, the uncertainty, etc., related to Brexit, the outlook, not kind of knowing where the UK will be technically in 4 years' time, the impact of a weaker pound, inflation, etc. So that's actually been digested pretty well, as has politics on the continent with the German election. Merkel won again, but with a weaker hand. Going to be a new coalition rather than a grand coalition, so it'll be made up of three parties. There's some questions actually whether the FDP will have a stronger views on fiscal discipline, which could actually be good for Europe in terms of reining in the problems of past. And then over in France, Macron didn't have quite the success he would have liked in the Senate elections, which highlights his problem of being in power with a new party. It's still early days.
Yes.
So I think you're right. Markets are finding their feet, digesting all the news. There's been no big move up or down. It's been a very, very, very quiet start to the week.
Well, it's been interesting when we looked at the start of the year. I think kind of the French elections, the German elections. There were a lot of kind of key points as we went through the year that these could be the flashpoints for 2017. And now it feels that's out of the way.
Yeah.
And now it feels, I think the focus will be on central banks towards the back end of the year. I think these are the key events, and that will, not necessarily for the rest of the year, but how we now approach 2018 and what that means for assets. Would you agree with that?
I mean, yes. The political events, in Sunday, yet again, we saw a surge in popularity for a far-right party, a more especially anti-immigration. I forget, it was Merkel who opened the borders to all the refugees, and that's seen a huge backlash in Germany. So the AfD party has surged in popularity, 13% straight into parliament. That changes the makeup of politics a little bit in Germany. And don't forget, in France we also saw huge popularity for Marine Le Pen in the run-up. And neither party has been successful outright, although the threat was always there. In terms of looking forward to, yes, I agree, the central banks for the rest of the year, we pretty much know what they're going to do. There's probably a strong likelihood we get a rate hike from the Bank of England, and we know that the Fed is beginning to unwind its balance sheet and may well hike again towards the end of the year. So if anything, many of the risk events may well indeed already be well flagged. Should we be necessarily fearful running into them? Perhaps not. To be honest, it was fairly similar into Prime Minister May's speech on Friday, because so much of it was out in the open. The only surprise I took from that was that she did use the line, no deal is better than a bad deal, which we'd expected to be dropped in terms of a move forward and saying that we are prepared to negotiate a bit more.
Understood. Well, let's move swiftly on. Let's look at some stock specifics. First off, very quickly, Unilever, a little bit of news out today. Positive, I assume, for Unilever? Yeah,
it's a €2.5 billion acquisition of a South Korean firm, adds to, adding another personal goods name to the portfolio. As you said earlier, bolstering it in terms of size, and perhaps it makes up for the fact that they didn't have any success in terms of picking up Reckitt's food business, which it's in the process of offloading. So again, steady as she goes, incremental addition for Unilever, big consumer staples, personal goods name.
Understood. And an active one today, Imagination Technologies. Well, it's this tech space. We've seen this M&A happen, and finally something going on with Imagination. Again, positive story for that.
Yeah, Imagination had pretty much put itself up for sale in June. and we've got a bid in from it's an American PE fund, but with Chinese backing. The question now is whether the UK government will want to kind of step in. We've already seen ARM Holdings disappear off to SoftBank. Do we want to lose another one? Albeit this is far smaller. I think 500 million compared to ARM Holdings, which I think was well north of 20 billion. But it still sees a loss of another tech name from the UK, and too many acquisitions.
But also positive for the small fintech companies, the tech companies coming through, that they can see that this is the roadmap, that if you finally get there and float. I mean, Imagination Technology, been around for years and perennial big target.
They've been taken out at a price far inferior because of the news that Apple was going to eventually sever ties. So it's been taken out, yes, but not the most fantastic of pricing compared to historically. It's still 40% premium to Friday's close, but I'm sure there will be calls of opportunism coming in with the weak pound and making it cheap for the outside buyers.
Yeah, understood. Lots of M&A to look out for. Speaking of the weak pound, well, actually, holding us on 135.34, euro sterling. There, we did a piece earlier on sterling euro, the reciprocal pair. Worth looking out for.
Yeah, sterling strong. I think there's potential for breakouts if we get a second wind on either sterling strength. It may well indeed come from either euro or dollar weakness. So potential for to get above considerable long-term falling highs, and resistance opens the door to further gains.
Fantastic. Looking at, well, there we are. Sorry, we've got the chart as well.
Indeed.
Sterling euro. We're talking of, obviously this is reciprocal, but look, we could touch 120 at some point,
flag there, or an ascending triangle, which if we can get above 114, or as I said, 0.86 would be the reciprocal, could open the door to 1.2 or 0.8.
Super. And let's have a look finally at the economic calendar. At the top of the show, we were talking about central banks and how they'd probably be key in the final quarter of this year. Well, it's jam-packed. We've got Dudley speaking from the Fed. Look out for, obviously, Draghi at 2 o'clock today. Sandwiched in there, we've got the Dallas Fed at 3 o'clock. ECB, Kerr speech. Fed Evans speaking. Yeah. And Kashkari finally later on tonight at 11:30. So it'll be interesting to see if all the Fed members are still on message, as they have been since last week. Look out for that. Any final points on the market?
I think, as I said earlier, the relatively calm start to the week is nice to see. It remains to be seen what's the driver to kick us up higher or lower. The FTSE's broken back below 7,300 following Friday's breakout on a weaker pound. The FTSE still seems to be very much moved by sterling weakness or strength. The strength is a hindrance, the weakness is a benefit. So we'll be looking for probably further moves on the FTSE, and indeed the commodity sector. I think the miners are weighing on the UK index a bit more heavily than the rest.
Brilliant. Well, Mike, thank you very much for joining us today on Core Finance.